Hey guys, Bitcoin just did something on Monday, August 30th that's got my attention. And we're going to talk about that when I return on the Eric McNeal Be Free Show.
Black men and white men, Jews and Gentiles, Protestants and Catholics will be able to join hands and sing in the words of the old Negro spiritual, free at last, free at last. Thank God Almighty, we are free at last.
Hey guys, welcome. You've just discovered the Eric McNeal Be Free Show, where it's all about being financially independent, responsible for self, enjoying life, and empowering others. Free. So today, I want to talk about something Bitcoin just did. Now, I'm not trying to turn this channel into a Bitcoin channel. You know, I get requests and people asking me that, they found out that I actually trade. So, from time to time, people be reaching out to me, and I really don't have time to discuss with you, what I do in terms of trading. Because, I'm trying to, all my time is wrapped up into migrating culture crossing. And, so you try to contact me, you better be trying to buy a house or something. You'll be contacting me talking about, hey, I want to ask you. No, I don't do that. I think people get it twisted. Boy, my time is valuable. It's very valuable. And I value my time. So, it's not that, I just want to ignore people, but the time is extremely valuable, and I don't have any free time. I hear people be talking about, hey, you got free time? No, I don't have none of that. I don't even know what that is, free time. No, my time is not free, and I don't have any of it. So, anyway, I'm just going off on a tangent. Anyway, Bitcoin. Let's talk about Bitcoin, cryptocurrency. Let's talk about the market. You just did something very interesting. And I'm going to show you my screen. We're going to talk about that. But I want you to understand that cryptocurrency, this new thing called cryptocurrency, digital money, it is the money of the future. Whether you and I like it or not, it's here to stay. It is not going anywhere, okay? So it's best that you understand it. And I'm not telling you that, it's all perfect and, angelic and built by good people. They told you that somebody named Satoshi Nakamoto or something created the Bitcoin and the cryptocurrency. And, had me for a minute. It's like, man, get out of here. Ain't nobody hardly named no Satoshi Nakamoto created no Bitcoin. The people who created Bitcoin are the same people who control the monetary system, right? So that's who created Bitcoin. And what they're doing is they're shifting the world from the current monetary system to a monetary system based on digital cash. Okay? That's what they're doing. And a lot of this chaos that you see around the world is just a distraction to help them push that shift and push it forward. So don't be thinking that you getting away. Oh, the banking system is terrible, Eric. And Bitcoin is a rebellion against man. They're giving you a story. Okay? They're giving you a story. You're being duped. You're being duped. So you don't believe me, do you? That's Eric Satoshi Nakamoto. He created that. Okay, keep believing that. Keep believing that. I got some land on the moon that I'm going to sell you too. I'm about to show you something. Wait a minute here. Just wait a minute. Hey guys, so check this out on the screen here. I'm showing a 1988 issue of the Economist magazine cover. Right? This is the cover. Did you hear what year I said? 1988. I want you to read the cover. Get ready for a world currency. Right? You already had a world currency at that point. It was called the US dollar, the petrodollar. Right? Same world reserve currency we have now, but They're telling you, get ready for a new one. That's what they're telling you. And they have here, you can see all the currencies underneath burning up, burning. And you see the phoenix. You know it's a phoenix because it says 10 phoenix. That's what it says on there, right? That's the coin. It's a 10 phoenix. And look at the year. Look at the year. 2018. So that was 30 years prior to 2018. Now what happened in 2018? Bitcoin just shot up. Whoosh. Shot up like a what? Like a phoenix. Just out of the ash. Right? It started around 2009. Came on, started trading around 2010, 11. And 2018. Shot up like a phoenix. What, 20,000? It hit. So they were letting you know that we're going to implement a new monetary system. And that's what they were telling you. Now, The Economist magazine, in case you don't know who owns that, is owned by the Rothschild family. Whoa, who's the Rothschild? You better look up who the Rothschild is. They control the monetary system. This current way, current money, they control that. They created that, right? Current system we use all around the world. All these central banks and Bank of International Settlements, they control that. So basically what they were doing, I'm just speculating here, Hey, I figured this is what they were doing back in, 1988, when this cover, 1988. They were telling the central banks around the world, they were telling the countries around the world, change over to digital currency. This is how we're going to do business. So you got about 30 years to start changing over. And the countries, looked at that and said, no, we're not changing that. We're not going to change. We like the way we do business now. We ain't trying to change. And then they released this cryptocurrency, talking about this some Satoshi Nakamoto and all this. They released that, so basically they were saying, oh, you not? Watch what's going to happen to you. That's what they was telling them. Watch what's going to happen to your currency if you don't change. And so when this thing called Bitcoin hit the market, boom. And people just ignored it, and then it just started gaining ground. People ignored it, and then it just poof like a phoenix. You can't ignore it anymore, because let me tell you something. Bitcoin and cryptocurrency is a country killer. You don't understand what I'm saying. You don't understand cryptocurrency. Cryptocurrency will kill a country, right? Because if you have a currency that you don't control it, and people in your country just spending whatever currency they want, then how you gonna collect taxes on that? They spending in your country the currency from somewhere around the world. How you getting your tax money? You need them to be investing in your own currency. So that's why when they released this thing called Bitcoin, it gave the countries no choice but to start adopting their own digital currency. This is why now you have these central bank digital currencies coming out, because if the central bank doesn't adopt it, then they are left to compete with currencies like Bitcoin and Ethereum and other cryptocurrencies out there. It's a death blow. And that's what the people who control currency and the monetary system around the world was telling them, that you watch and see what's going to happen to your monetary system, to your potential way of life if you don't adopt this thing. And they're being forced to adopt cryptocurrency now. Ghana has their pilot program going on for a digital currency backed by the central bank, the digital city. Yes, they do, right? Ain't got no choice. What else they gonna do? Been sitting and poof, get punched by Bitcoin and these others? You better adopt it. You better adopt it. Yeah, they got that. It's just the digital city. The digital city is going digital, y'all. As a matter of fact, I got this off topic, but it's staring me in the face. I haven't spent it. This a new coin. It came out, I don't know, maybe a couple years ago or something, I don't know. But it's relatively new. It's a two-city coin. And every time I look at this, I just shake my head because I don't know who's responsible for this. Whoever responsible for this, I want y'all to tell them. I got another. This one is a one city. It just came out too, I think. But whoever responsible for this down at the Bank of Ghana, whoever did this design of this two city, y'all need to get a belt out and whoop they, you know what. Because you look at the one city coin. You ain't got, I don't know if the camera gonna pick it up, but you ain't got no problem seeing that it's one city. I mean, so if I'm at the light or something, buying at the on street Walmart, at the traffic light, then boom, I can do it real easy. And that's the same with all these coins. I ain't got no problem seeing that this is a 20 peso. However you pronounce it. I don't know how to pronounce it. Peso. This is a 50. I don't have no problem seeing that. But now you pull out this one. This booger. You pull out this booger here. It's a 2, but you can't see the 2. you got to put it all in you got to turn it and twist it. The 2 is in some lines and it's barely visible, y'all. It's just on the corner in here. It's just on the corner. It's like in the grooves here. And you got to do all this stuff. Lord forbid, you can't see well. I can't even see it with my glasses now because I don't have my glasses on. I can't even see it with my glasses. It's just, man, it just irked me because I don't even know how they I'm all off topic, y'all. Anyway, we supposed to be talking about Bitcoin, and all that good stuff. I'm telling you right now that this cryptocurrency is no accident. Ain't nobody named no Satoshi Nakamoto, and all this chaos that you see going around the world right now is just preparation to usher in cryptocurrency as the new money. That's why you had to stay on lockdown and in your house arrest for 6 months, 7 months, a year, however long. I don't know how long y'all was under house arrest because I'm out in the country. I ain't have no house arrest. But anyway, that's why you was on that lockdown because they trying to create an environment that would be favorable to digital currency. So when they make you do everything online, then they're creating an environment. So little by little, these cryptocurrencies, Bitcoin leading the way, is going to become money, the future of money, right? It's here to stay. It's not going anywhere. And, you might say, well, Eric, is this kind of like, devil system, the mark of the beast? You call it what you want to. Isn't the US dollar the same thing? So this is the mark of the beast and the devil system ushering in. It wasn't created by no angels. You can best believe that. So, but the same people control the US dollar, same people, who control this. So it's just, marching in the direction where, they'll have more control over you, cause you do Bitcoin. First they came out with Bitcoin and it was like, oh, that Bitcoin is bad because you can't track it and people can do things anonymously. And so all the people, who who like to hear that kind of stuff, including me, was like, yeah, I need that Bitcoin in. I don't want them giving up with me. And we was dupes. Man, let me tell you something. Every move can be tracked once you start using the cryptocurrency. Every move. Now, there are ways around if you know what you're doing, but 99.9999% of the people ain't going to understand those ways, right? So, but you track everything on blockchain, cryptocurrency, that stuff. You track it all. So that's what they're getting at, is more control. More control. I'm sorry, that's where we're going. It's coming. It's here. So anyway, it is new money, and people, they say, you hear them say, well, this coin is going to be better. My Ethereum is going to be better. My ADA is going to be better. This is going to be. Listen, Bitcoin controls all this stuff at this point. If Bitcoin don't succeed, nothing will succeed. Everything follows Bitcoin in the market right now. So, some of that stuff, might eventually, break away and have its own life, but everything follows Bitcoin. So, and, at the end of the day, I don't care what wins. If you invested in cryptocurrency, you'll be all right, regardless of what wins. Regardless of what is double money or whatever, you and I better get used to it. And I'd rather have you understand it than not understand it, okay? So that's what I'm at least going to show you today. People be asking me about it, and I want to take time to share it. I don't want to turn my channel into no cryptocurrency channel, but this will show you how you can make money abroad. Living in Africa, you can trade the cryptocurrency, invest in cryptocurrency, and make some money. And so let's just show you some things here. And one thing that I will tell you, that if you do get involved in cryptocurrency, do not margin trade. That you really know what you're doing. Do not margin trade. Do not trade on margin. I'm telling you now. I'm telling you from experience too, that this thing is basically, this Bitcoin, man, it's to take your money so fast, whoosh, right? It's our new currency and all, and it's going to continue to go up and rise, but it's a money-taking machine, right? It is a money-taking machine, and you don't bet against the house. Buddy, I'm telling you that right now. There's some stuff in here, I'm telling you, you better watch out. You start margin trading, they're going to bust your head to the white meat, okay? And you come back here bleeding and tell me, yeah, you warned me. I'm saying, yeah, I warned you. So, hard head, make us off behind. But anyway, let me show you some stuff here. Okay, guys, let's go. Let me cut the light on. Man, it's getting dark, so I don't know, my video may be a little dark for showing my picture. But anyway, I'm going to show you something here. This is not necessarily for like a complete beginner. Like, I started making a cryptocurrency course, but I haven't had time to finish the course because I started this project and started running migrating culture crossing, and so I really hadn't had a chance to finish the course. So, but this is just this information that I'm sharing with you was a little bit that was included in the course, but this portion, it just really wasn't designed for like what I'm showing you for a complete beginner. So, but I still want to show you some beginner stuff, because I know some of you guys are still probably extremely new to cryptocurrency. So I'll just try and briefly go over a few things, but really it wasn't designed, the stuff that I wanted to share with you, for complete beginners. Okay, I just want you to understand that. If you don't understand what I'm talking about, you have to go and do your own research, and just go to Google, YouTube University, and research some, definitely research some information on cryptocurrency courses and stuff. And I know a lot of them mislead you because they're trying to get you into they call them shit coins, and leave you holding the bag. But at any rate, this website that I'm at right now is called coinmarketcap.com. It's probably the most used website for cryptocurrency in terms of just viewing the pricing action and where the market is. Like if you go here, it just has a listing of all the relevant cryptocurrency coins, that you can find. And if you go look at the upper left corner, you can see it says cryptos, 11,551. You see how many there are? There's just tons. This isn't even all of them. This is just the ones that are listed here and the most relevant, but there are more cryptocurrencies, believe me. And then it has the exchanges. These are the places where you can exchange, buy and sell cryptocurrency. And 405. And then it gives you the market cap. This is the market cap of all the coins. And it's currently $2 trillion. So almost $2.14 trillion. You see that? So it's growing by leaps and bounds, guys. And then it just gives you the volume that has been, 24-hour volume traded there. So $123.4 billion. And it tells you the dominant coin, which is Bitcoin, right? And its dominant is like 41.8% of this entire market. And and so it has a lot of other interesting things. You can just go through here and see what the top coins are. And everybody's always talking about their coin. Hey, my coin is Ethereum. My coin is Cardano. My coin is this. And if Bitcoin fails, everything fails. So listen, right now Bitcoin is the coin, so all that other stuff don't even matter. Now you'll see from time to time what they have is an altcoin season, and the altcoins will just shoot up, whoosh, and people be like, hey, you see them altcoins, man? That altcoin shot up 30% last night. That altcoin shot up 50% there. But I'm telling you, don't get fooled by that. Don't get fooled. Because what's happening is that in order to trade cryptocurrency, you have to transfer your fiat currency. Fiat is the US dollar. It's your city. It's your paper currency that they call it the fiat. It's the government-backed currency. You have to exchange it for cryptocurrency, get it into the market, and that might, depending on what exchange you're using and how you transfer, it may take, if you're using instant transfer, you might be able to do a little bit instantly, from your bank to somewhere like Coinbase or something, but it ain't gonna be, a whole lot, well, now I guess if you verify it, it might let you do a certain amount. But institutions coming in this thing, they trying to buy, just tens of millions of dollars. So they ain't transferring, they can't transfer that just like this. It may take days to get that over. And so when they go to buy and they say, well, we need to make an investment, $100 million into Bitcoin, well, they can't let anybody know they're doing that, and they can't make it so obvious, because if they just say we about to make an investment, $100 million into Bitcoin, then the Bitcoins are going to go up like, people going to drive the market up. So when these altcoin seasons start, they're putting money into the market. So they're putting money because they don't want to put it in Bitcoin. They put it in all these altcoins. So the altcoins start going up. And then when the altcoin goes up, that means Bitcoin going down. So they say, yeah, this is the right time to be able to get them. Yeah. And then you go to sleep. You go to sleep and wake up in the morning. And then you find out that it done flipped. And Bitcoin way up and then altcoins falling. Right? Because they just really wanted to get in to move a lot of stuff into the Bitcoin, now don't get me wrong. There's some, you look at here, Ethereum and Cardano, there's some big, money in these coins, and they have real use cases. So they're not going anywhere either. You know, they have real use cases. Now, some of these coins, like, let's go down here, Dogecoin. Like, Dogecoin don't have no use case, but it's number 7. You see that? Number 7. With a market cap of almost 37 billion. Almost $37 billion. And, you know, it's a typical shit coin. But people, you know, hear Elon Musk, you know, so when it was just nothing, Elon Musk and, you know, when Tesla, you know, they went and bought a lot of it. And then Elon Musk went around pumping it. And that's where it pumped. But it hasn't. So people that's invested in this, they don't know. The only reason they invested is because Elon Musk pumped it. But it has no use case, you know. It don't have a use case like Ethereum. And, you know, so at any rate, yeah, this is what it is. This is coin market cap. One other thing to bring to your attention is something like this number 5, Tether, USDT. Where this is called a stable coin, all right? A stable coin. And a stable coin is essentially supposed to be pegged to the US dollar. So from time to time, if you're trading Bitcoin, and let's say you say, okay, I'm in Bitcoin, but you want to get out of Bitcoin and put your money back into the US dollar. Well, you can't transfer your money instantly out of Bitcoin. You have to have a way to hold it in cryptocurrency, but is not, you know, something, a cryptocurrency that fluctuates up and down at a, you know, like Bitcoin might or like Ethereum might. So you have these companies came out and created these stable coins that they say were tied to the US dollar. So it's just like you putting your money in the US dollar. So right now, the biggest stable coin is Tether, USDT. And look at the value. The market cap is $65.6 billion. Now, and I'm pointing this out because this is a warning for people who are keeping their funds in this, because the government, you know, is U.S. government, U.S. New York Attorney General, they have been going after the people behind Tether, which is Bitfinex. They have been after them. So this could be the next thing to bring the market down, is people who are leaving their monies in Tether thinking that this is like safe like the US dollar. Well, Tether is not backed by the US dollar. Even though they say they are. They've not been audited. They've not shown one shred of evidence that that coin is backed by the US dollar. Right? So when the government, US, finally get them on the ropes, man, it's going to create a fallout in the market like you've never seen. So I'm just telling you what can come if you keeping your money in this, you know. Now, a safer choice if you want to move your money into a safer stable coin, it is a coin called USD coin. USD coin is currently number 10, and it is a coin that's created by company Coinbase, which is one of the exchanges. And, you know, I think Coinbase is fairly reputable. And, you know, so they have shown that their coin is indeed backed by the US dollar. And they've been through their audits and everything. So this is a much safer bet. It currently has a market cap of $27.4 billion dollars, but safer bet. And there's other stable coins you'll see. Even Binance. Binance has a Binance coin up here, and it's like number 4. That's their coin, their exchange coin. But they also have a Binance USD stable coin. Now, you know, Binance is the largest cryptocurrency exchange, and people think that because they're the largest, it's the safest, but that's not. Because some countries they're regulated, some countries they're not, you know, so it's like they can do whatever they want to. I've seen them do some shady stuff, and let me tell you, these cryptocurrencies have been doing some shady stuff, stealing people money. They got me. I ain't gonna lie. Not Binance, but I've been had, because these things are not regulated, people. Let me tell you, you put $10,000, $20,000 in it, and the next day they tell you, oh, the cryptocurrency exchange went out of business. They gone. One of them in Canada said the owner was in India on a vacation, and he went missing, and he the only one had the keys to all of the people coins that had their money. So I can't remember how much money, but it was like $300-400 million gone of the smoke, and none of the employees like, well, you didn't have the keys. The owner had them, and he missing in India. So they come up with some schemes on you, boy. Yeah, he missing, all right. He missing. I bet he is missing. And stole them people money. But anyway, that's neither here nor there. Let's keep on. So coinmarketcap.com. Now we just over here to this window, and this is tradingview.com. Tradingview.com. And on TradingView, you can actually create a free account. I'm just using the free account here at this point. I used to use the professional accounts, but I can do what I need to do at this point, because I'm not doing a lot of trading. If I was doing like a lot of day trading, I would use a professional account again, but I don't do a lot of trading right now, so the free account is fine. And you have your limitations, but it's cool. So I just have a chart with nothing on it. And this chart is the Bitcoin/US dollar chart. So the Bitcoin/US dollar chart, and it's from the Bitstep cryptocurrency exchange. And you can choose multiple, the exchanges that you are going to be trading with. So if you want to trade on Coinbase or Binance, you can choose the price action, but the prices are about the same from exchange to exchange, but they do vary a little bit. So if I click up here in the upper left corner, it's going to bring me with all the symbols. Now these are the symbols from, you got stocks, and you got futures, the Forex market, the crypto market. So you got all kind of, let's see what they give you. Well, they don't give them because I'm now Forex 50. So yeah. So what's happening? Let's see what they're gonna give me. All right. So let's go to stock. So yeah, I want to go there and I want to see Apple stock. I can click on it. It'll bring me up the chart for Apple on the NASDAQ. Boom. Alright, but I'm not interested in the stock market. I'm interested in cryptocurrency market. So, and particularly, I'm interested in the BTC USD. And this just means that I want to... Okay, so let's pull up BTC USD. It's already in there. But I want to pull it up for right now. Yeah, I want to pull it up for Coinbase. So you can go to any exchange that you, like I say, that you plan on trading on, and just pull it up for their particular exchange. And this is what we call a currency pair in trading. So you have, if you're familiar with Forex, you have currency pairs, and this is no different. You have, this is BTC against the US dollar. So it's BTC measured in US dollars. You can have BTC measured in cities, BTC measured in British pounds. So I'm going to use US dollars. Yeah, so this is the chart. And the thing is, if you go in the chart, usually you might see this if you go to the right and right click. You see it selected as regular. And regular is just how it displays, which is, it displays the actual value as the price moves up and down. And if you're using the regular, it's just hard to determine significant moves, because the value goes up so high at times, and it drops so low. So I prefer, and most other traders are going to tell you to change this from regular to logarithmic. And I'm sorry if you are, if this is like something that you already know. But some of my users, I'm pretty sure they don't know anything about no Bitcoin. So I'm just trying to briefly touch on some of this stuff. But let's see. So I'm going to go over here and I'm going to say auto fit data to the screen. So I get everything pretty much on the screen. Then I'm just moving my mouse down so that, yeah. So you can see that I got the entire chart from the beginning. So this just shows that on Coinbase, they first listed it at, let's see, in December 2014. I'm going to change this to another chart to get a little more history, because Coinbase didn't list until 2014. So I'm going to go up here and I'm going to change this to Bitstamp to get a little more history. The 15th of August 2011 is what this is going to go back to, okay? And that's cool. So now I got my Bitcoin chart up, and you can see how it moves up, moves down. And these are huge moves, by the way. Like this move from here to here. It moved to the peak 10,000, 11,000%. Right? 11,000%. And, this is a ruler. I'm going to just measure how long it took it to do that. That's a huge move. So that move was, over a period of 500 days. You see? So when people see these large moves down, let's see, I'm going to take the ruler and I'm going to measure one of the down. Well, let's measure this one that we just measured the up. It moved down 77%. Yeah, about 77%. So, so when people looking at these large moves, they're like, whoa, Bitcoin fell all that way. But look how much it moved up, people. It moved up 11,000% before it fell down 77%. So you have to look at that. That's a correction. It's necessary. Nothing goes up forever and nothing goes down forever, right? So when you have these pullbacks and they scare the daylights out of you because you think it's going to go all the way down to zero, just know that the billionaires who are duping you, they have all of this technology, this AI, and these machines, they know exactly when the average person is going to pull out. They know when you need money for the rent, when you have to pull that money out. So they keep driving it down and driving it down. And then once you get nervous and you pull out, then they turn the market around and it goes back up. So it seems to go up as soon as you get out of it, right? Because they're using AI technology, that knows the psychology of these people who are putting their money into the market, the retail investors who don't really understand investing. They got you going and coming. So at any rate, this is the market, and basically what I want to show you is why I'm excited about Bitcoin at this point and what I see. I'm on the weekly market. I'm going to put an indicator. You go up here where it says FX, and you have a indicators and strategies. I'm going to put two indicators on the screen. Let's see. One, it's going to be just golden cross. Maybe this one. I'm not sure which one, but I'll try this one. Okay. All right. Then I'm going to put another indicator on the screen. And this one is going to be EMA, maybe I'm not sure what it's called, I forget. Maybe DEMA cross, yeah, I think this is it. All right, so if you see now, my chart has some indicators, some lines on it. Now, in the chart, it just basically tells you, if you're new to trading, the green means that the price is going up. Red means that the price is down. You know, price is going down. That's all that chart is telling you. Now, I'm going to, if you click on this little eye, it makes the indicators disappear. So I want both of them to disappear for a moment. And I'm just going to bring one, I'm going to make a change in this golden cross. I'm going to make a change in here. I'm going to change the number, this fast. I want to change it to 50. And this I want to change to 200. All right, so these indicators that's showing this line, let's bring it back on the screen. Like it's showing this line, these two lines. These are moving averages. And the only thing it does is, depending on the numbers I put in there, like I said, for the fast moving average period, it's 50. So if I'm on the daily, let's go back to the daily. And I've got this fast moving average. And it even tells me, so you know, you see if I change this 50 and I change it to, let's say, 100. Now you see how it moved? You see that red line, how it moved it when I changed it? And I'm going to change it back to 50. And it moved it up. So basically that's just a moving average, and what it does is at each point is calculating. If you have it on 50, it says, okay, let me take the closing price for the last 50 days and give them the average. And the one that says 200, that's the yellow one. It says this is the top one is the fast one, and the yellow one is the slow one. The slow one just says, I'm going to take the last 200 periods. You know, in this case, because I got it on days, it's saying the last 200 days, and I'm going to give I'm going to plot out the moving average, you know, on that day. And if I change it to week, then it's saying the previous 50 weeks, I'm going to give you the average. The previous 200 weeks, I'm going to give you the average. Now, the way that this works is I'm going to, you'll hear in the market, they say the golden cross has happened. The death cross has happened. This is what a lot of traders use to determine when to get in and out of the market, is the golden cross, death cross. The golden cross, simply, I'm going to put it back on the daily. The golden cross just simply means that the fast moving average, the 50, has just crossed above the slow moving average, the 200. That is a golden cross. Now, people call everything golden cross these days. It doesn't have to be the 50 and the 200, but traditionally, when we talk about a golden cross and a death cross, we're talking about the 50 and the 200 moving averages. So the way that this works is essentially that every time you see the cross, you're supposed to enter into the market. And if you see, you know, when you see the golden cross, you enter. And when you see the death cross, you get out, right? That will keep you out of trouble, right? But what happens is we get greedy and we think we can time the market. So we don't pay things like this no attention. And some people trade on the daily. Some people trade on the hourly. Some people trade on the minute. It just depends on how long you want to stay in front of the computer. I don't have that time to be staying in front of the computer all day. But, you know, I got the chart on the minute. And so these time frames here from in to out are very short at this point, right? You'll be trading all day, and it's not a good thing to overtrade, guys. I know some of you say, hey, I want to be a day trader. I'm going to be a day trader. I'm telling you, it's not, you're trading too much in a lot of instances. So, but anyway, this is how you do it. This is a good strategy to use if you're new to the market and you don't really know what you're doing. But I'm going to go back to the weekly on this. So if we go to the weekly, let's go to the daily. Let's go to the daily. And let's do this. So back on the daily, you can see I want to see the golden cross for the daily. And this is the last golden cross we had was like the 14th, around the 13th or the 14th, we had that cross. And so for many traders, this was the significant point. So if I was trading the 50 and the 200 moving average, then I probably would have made the video and said, earlier I would have told you that, hey, something happened significant for me. But I use another set of moving averages. I mean, I use this too. Don't get me wrong. But what I'm telling you that I found significant is on a different set of moving averages, but it's the same thing. It's a cross. So I'm going to make this one disappear. So let's get rid of that one. And then my other one I'm going to bring up. Now, hey, the blue, you can barely see that, can you? I'm going to change the color. So let's see. Let's change the color. So instead of blue, let's do something like yellow. You can see yellow. All right, you can see that much better. I'm going to make the actual price of the cryptocurrency. I want to make it disappear. I want to hide it. So I'm going to go up here and let's hide it momentarily. So basically, you see these little crosses. Those are the crosses where you do your trades. You trade when it's when the fast moving average it's going up above the slow moving average. You enter your trade, and when the fast moving average is coming below the it's coming down below the slow moving average, you get out of your trade. In this instance, the fast moving average is the yellow line is our fast moving average, and the red line is our slow moving average. And instead of a 50 to 200, I'm using a much shorter time period. I'm using an 8-day moving average, and I'm using a 34 moving average. And yeah, so it's a different time period than the 50 / 200 moving averages would show. But so for me, so this is what I wanted to show you, where I'm excited, because if we put this on, I want to put this on weekly. I like to do weekly. I'm not too much interested. Well, I am interested in a daily as well, but for me, what had me excited was this weekly, because the weekly is more accurate than the daily. And that's just how it is. It's stronger, the larger the time period, the more accurate these indicators tend to be. So now we've just printed an cross right there. And that happened the 30th of August, right? So this is what got me excited on the weekly, though. It's the weekly, guys. I want to remind you that. Now, I'm going to show you why that has me excited. If you look at your whole entire chart, Let's squeeze it on the screen. And we don't have the pricing in there, but you can still see when it goes up and down based on the lines, right? All right, so the first cross that it printed was, let's see, 26th of November, 2012. This was the first cross. I'm gonna put a vertical line at that cross because I want you to see it. Boom. I put the vertical line. Now, you know when we get a cross going up with the fast moving average going above the slow moving average, that's when we enter a trade. So this shows you when it's time to enter a trade. And when it's the opposite, the fast going below, it's time to exit. And you can see that happen on, what was it? It looks like the 24th of June, 2013. And I'm going to put a vertical line here as well so that you can see it. Boom. Now, because this is when we exit the trade, I want to change that color so that you clearly see when it was time to enter and when it was time to exit. Okay, so I'm going to go and change this color. I'm going to change that color to red. So, yeah. Well, I guess that looks like a red. All right, so you see, hey, time to enter. Now, if you look at this entire chart, you see that we don't have a lot of points. So you don't have to do a lot of trading. This is why I like these higher time frames, you know, a weekly. Because if I tried to do this, some people, you know, they're not this patient. They want daily or 4-hour trading. And if I move this chart to a daily, you see all those points now? You'd have to be entering and exiting all these points, a lot more points. So, I mean, yeah, it's okay. Yeah, it's a lot more points that you have to deal with if you're going to do this. I mean, if you want to trade moving averages on like the daily or even, you know, lower time frames, then I would suggest the 50 and 200, you know, yeah, that might be a little better. But, you know, you can still trade it here, but you have a lot of, you know, trading that you'll be doing. Let's go to the 4-hour and see how many points we got. Yeah, see, if I try to squeeze this all on the chart, you see all those points. Those are points you're supposed to be trading, you know. So I don't have that time to be doing all that trading. So I'm gonna go back to my weekly, and you can see if you did this, you have like what, 1, 2, 3, 4. There's like 5, 6, 7, 8, 9. 10, 11, 12, what's that? 13, 14, 15, 16, 17. 17 trades, people. 17 trades from 2012 to the current time here. So, yeah. With, you know, 8, 9 years, you only had 17 trades you'd have to take, right? Little risk involved if you just follow like this chart. Little risk. Soon as it go below, you know, a lot of times we don't like to do this because we be trying to catch the top, right? Because if you trade there, you ain't gonna necessarily catch the top. And a lot of people be like, but I want to catch the top, and that's why they get themselves into trouble, right? I mean, I used to do that too. I understand. But anyway, what we're going to do is I'm going to go and mark all of these with vertical lines now. Let's go mark them. So, all right. So what I'm going to do is first I'm going to mark the times to get out. This was the time to get out the market according to the chart. I'm just going by what the chart tells me. And this was the time to get out of the market according to the chart. All right. this was the time to get out of the market according to the chart. This was the time to exit the market according to the chart. This was the time to exit according to the chart. This was the time to exit. According to the chart. And this was the time to exit according to the chart. Now let's just, the remaining check marks, of course, going to be times to enter the market. So we're going to put vertical lines. Okay. All right, so all the remaining X's will get a green vertical line. Okay. And let's do, oops, I think I just made a, here, let me go back and undo that. And I just want to expand this some so I can see exactly where to put the line. Right there. Okay. All right. Alright, so yeah, so you can see what I'm doing. I'm just highlighting so that you can really see, because once I put the prices back on the screen, you really won't be able to see the X's, right? It'd be hard to see. So I just want to have these vertical lines so that you're going to still see where to enter and where you would have exited. And that's going to make it things a lot easier to visualize. There we go. 17 lines to show you since 2012 to 2021 where you would have entered and exited the market. So let us now go back and unhide the actual pricing action so you can see the candles. So these are the pricing candles here now. So you can see, bada bing, bada bam, right? Very easy. You don't even have to think about this. You know, and this is why I tell you, hey, I'm excited because you can see every time we get that cross, man, that market shoot up. And sometimes, you know, let's see, you know, you get very few losses. Like here, it did a green cross, but it still, it went down. It didn't go, so it was like a fake out. You know, gave you the green cross, you would have entered, but look how much you lost. You didn't lose virtually anything. So, but when you gain big. I mean, you gain big, like from here, and they say exit here. Let's see. So what I'm going to do is I am going to just put down how much we would have gained if we went by this. How much would we have gained? All right, so this we got in and it went up. Let's see. 730, about 732%. You see that? Let's get the time. Let's put the time, how long it took. Okay, so here to here, I don't know, I'll say 740, around 740 over 203 days. Around 740 over 203 days. All right, so let's see. 740% in 203 days. I'll leave it green because we had a gain on that. All right, so that's boom. That was a gain, and okay, the next one. Okay, I need to change this to green. Let's change that. All right, so from here to here, we had another huge win, and let's see what we got there. Here, then you get out the market here. 533% and 534% over 175 days. 534% over 175 days. 534% and 175 days. Okay, so that was the next one. All right, so let's keep, and that's all. We're just going to do this for all of them. Okay, it's not rocket science, guys. Really not. In fact, what I'm going to do is I'm going to go ahead and speed this up, and yeah, so you don't have to sit here and watch me do all of these. So, yep, and I'll come back with you when I finish it. Okay, guys, I have finished. It's dark outside, so I'm not going to be too bright on the camera here. So please forgive me, but this is not about me on the camera. It's about the stuff on the screen. So at any rate, I finished all of my inputs. So let's see what we got here. So if you can see, what I'm going to do is maybe, let's see if we can see this a little better if I hide the prices on here. Yeah, you can see it a little better now, right? All right, so yeah, so since 2012 to current, like the first jump, you had 740% in 203 days. The next trade would have given you 534% in 175 days. The next trade would have given you a loss of 6.3% in 14 days. Just 6.3% you'd have lost. Then the next trade would have given you 175% in 476 days. The next trade would have given you 1,700% in 462 days. Okay. The next trade would have given you 172% in, what's that, 196 days. The next trade would have given you 2% in 28 days. And the next trade would have given you 585% in 371 days. So you can see that, if you had just been following this strategy, there's a lot of strategy, guys. Don't get me wrong. There's a lot of strategies. I'm just giving you one surefire way of not losing your money in this thing, and that's just using the moving averages and using the one that I like to use. So and that's the 8 and 34 EMA moving average. So let's see. So we just had to cross, and we're just waiting, right? We're just waiting to see. It may cross back down, and then you just get out, right? That's if you're doing the trading thing. Now, let's put the whole thing on the screen. I want to show you something, because you can just put your money, even if you had to just put your money in Bitcoin and left it, man, you'd have been all good. You'd have been all good. You'd be riding somewhere, high right now. You just put your money in Bitcoin, get your $1,000, boom, put it in Bitcoin 2012, and you just left it in there and didn't touch it. Man, get out of here. You'd be good. So let's just calculate that. If you had to just put your money in Bitcoin and you had put $1,000 in 2012 in Bitcoin, where would we be? Where would we be? Let's see. All right, 2012, December 2012, I'm going to start, and then I'm going to say my current. You see that horizontal line, red line? That's where we at right now. We'll put it right on that current time frame. That would have given us a percentage increase of what? Good God Almighty. That number so big I can't even say it. 452,402%. 403, you know, you round it out. But 452,403% in 3,199 days. So about 3,200 days. 3,200 days is what we're looking at. So, yeah. You see that? Man, that's serious. Let's bring up calculator. Ooh, yes, indeed. Have mercy. That's a lot of money, guys. That's a lot of money. You see how Bitcoin just eating away at the other financial institutions, because all that money is coming out of those institutions like the U.S. dollar, the petrodollar, and other currencies, and it's going into cryptocurrency. And it's just starting. It's still just starting, guys. Wait till the flood really comes, and man, it's gonna eat away at those currencies. So nothing else. You invest in Bitcoin as a hedge for the failing currency. You know, all these failing currencies that we have. All right. So yeah. Let's look at that again. So I'm gonna just say 489,000%, and 489,000%. And okay, I thought I brought my calculator up, but let's do that again. Maybe. All right, so 489,000, guys. I want you to see that. Let me see. Let me put notepad here. All right, so about 3,200 days, we had an increase of approximately 489,000%. Right? This is what it said, right? Okay. All right. So watch this. What we want to do is say, what if we had took $1,000 and put into the market at that time? Huh? What if we had done that? And 3,200 is 8.7 7 days. You know, so 8 point. You know, you round it off 8.8 day. I'm saying days, but I mean years, guys. I'm so excited at that number, boy. I can't even think straight. But that's 8.8 years. So you know, less than 9 years, you'd have had 489,000. I want you to understand that. So now, if we want to calculate how much, if we had to just put that 1,000 in and left it there, let's calculate how much it would have given us. Let's calculate it. 1,000, and we're going to multiply that. So this is a percent, right? You know, y'all didn't pay attention at school. If you want to turn that into a decimal number, you take that at a percent sign and you move it over 2 spaces to the left, right? So there you go. That'd be 4,890 is what you multiply it by, times 4,890. What we had to add? Oh my God, O-M to the G. You'd have $4,890,000. My God. See, so you didn't have to do none of this trading. You just put you $1,000 into Bitcoin, and if you had enough patience and not gotten scared when them, when it started to decline 80%, boy, you'd have been rolling high. You'd have been riding high. Yes, indeed. Yes, indeed. Man, what you talking about? So, yeah. Yes, indeed. So, here you go. Here you go. Right? Right? There you go. That's what you would have, guys. That's what you would have if you had to put that 1,000. Now, let's see, just for comparison, we want to see if we had to put that 1,000 in and we had traded based on the chart that I'm showing you, based on these moving averages. What if we had traded based on the moving averages? Let's see where we would be. All right, so let's calculate the total out. Right, we're just going to go along and calculate the total. We start at 1,000 and let's see, 7.4. So, we're going to convert that to that 740% and to a decimal, which is going to be 7.4. And then we're going to add a percent, we're going to add, a decimal 1 right there. So instead of multiplying it by 7.4, we're going to multiply it by 8.4 because adding that 1 just takes into account the monies that I had in there initially, right? So it's just a little shortcut that I'm doing. So that's going to be 8.4. Okay? All right, we end up with that. Then we're going to multiply this by 6.34. 6.34. Okay, now this was the only loss we had. So to calculate this loss, what I'm going to do is I'll bring up another calculator here. And we'll calculate that loss and we'll subtract it out. Okay, so we were at 53,256 and our loss is 0.063 times 0.063. Right? So unlike the other, we're not going to add anything to that number, right? We're just going to leave it as is. So that gives us 3,355 is our loss. So I'm going to subtract that out, 3,355. Right? So we're left with 49,901. So that's not bad. And that was our only loss on this entire chart. That was the only loss you would have taken. Let's see. Next, we multiply by 2.75. 2.75. Next, we multiply by 18. 18. 18. Next, we multiply by 2.72. 2.72. Next, it's okay. So 2%, that's 0.02. So 1.02. So that's going to be times 1.02. Next is 585, so that's 6.85. 6.85. So that gives us, whoa, 46,943,351. Holy goodness, my God. Did I do something wrong? That's a lot of money, guys. That's a lot of money. Hey, wow, that's serious. That is serious. Let's see if, yeah, that is serious there. So we can copy all of that. And let's see. Let's paste that here. So we can get a good comparison here. All right. So there you have it. So if we had just left the money in there, it would still be looking pretty, 4.9 million. And if we had been trading it based on that chart, it would be at 46.9 million, right? So that's how much more is that? Like, let's see. That's, wow, what was that, about 8, 9 times more we would have made? 8, 9.6 times more, guys. 9.6 times more we would have made if we had been trading it. You see that? You see that? Yeah. You see the power of trading. Now, but it's not, this is all theoretical. Like, you're just not going to be putting the money in and just leaving it, likely, leaving it alone for no 8, 9 years, and you're not going to be trading and not taking profits, so this is all theoretical, but it just shows you, even in the theory, what would have happened if you're trading, right? So, yeah. Now, people are probably thinking right now that, hey, this whole Bitcoin, this alt season is starting, and the altcoins are going up higher than Bitcoin, Eric. Should I be investing in Ethereum? Should I go over to Cardano? Should I go over to Doge? Should I go over to, I'm going to tell you, if you don't know what you're doing, you just need to really stay in Bitcoin right now. If you know what you're doing, yeah, then you don't even have to ask me that, right? You know how to take advantage of alt season. And, hopefully you know when to get out of alt season. But if you don't know what you're doing, then you really going to lose money if you're trying to jump into altcoin because they're going up, because just as quick as they go up, they can go down. And if you don't know what you're doing, you're going to lose money, period. So it'll all work out. Just stay in Bitcoin. Bitcoin ain't going nowhere. It is the dominant coin. Even if it loses some of its dominance, it's still going to be the dominant coin for some time. So, yeah, I mean, you just work it like you see the chart, basically, like I told you, if the chart, reflect that you need to be getting out by the, the fast moving line, going below slow moving line, then you get out. If it comes back up, then you get back in. It's just that simple, guys. You don't have to think a lot about this stuff. Like I say, it's not rocket science if you just follow this strategy. This is just one of many strategies. Like you may have your own favorite indicator, your own favorite strategy. This is just one. So I'm showing you how to keep yourself out of trouble, okay? So at any rate, that is the signal that I wanted to talk to you about, is the signal on the weekly, right? This weekly moving average that I use, which is the 8 and the 34 moving averages, EMA moving averages. And looking at the weekly, we just had a cross. So that is the signal that's got me hype, and I'm back in the market. So yeah, so you let me know what you're doing. You're in the market, you're out the market, you're investing in Bitcoin. I'm telling you, it ain't going nowhere. You may as well learn how to deal with it, because it ain't going nowhere. Digital cash is here to stay, guys. This is what they're moving us to. So forget about it if you think this is just a fad. Anyway, that's it for me. I am going to call it quits. It is dark out there, man. I don't hear nothing but the crickets out right about now. So at any rate, go ahead, hit that subscribe button. Let me know what you think. Like, share, comment, and you can also follow me on Facebook at facebook.com/Eric McNeal. It's free. And as always, Ooorahhh Uhuru. Now be free.